Good morning, everybody, to this webinar on the EU Taxonomy. We are very happy to have you on board today. And we will be guiding you together on a cruise ship to a series of islands with different Nordic speakers on their experiences with their understanding of the taxonomy and implementation of the taxonomy. Again, welcome, sit back, relax, and we will guide you through the program together. So what are we going to do today? We will be telling you about a platform hailing from the Nordics, which is a Nordic platform for mobilizing climate finance. And today we'll be speaking again about the enabling environment of sustainable finance, in this regard, particularly the EU taxonomy. As you can see, we are doing this together with a group of organizations. In this regard, I represent South Pole. Gaia is there as well, which is a Finnish consultancy firm who will be introducing themselves later on. And the platform is part of initiatives as supported by the Nordic Council of Ministers. Just a few housekeeping rules before we really kick off today's program. So automatically you will be muted when you have joined by now. If you have any questions, then you can ask them in the question box. You can unfold a little window on the right and you can directly ask your question to us. There's a team of people looking at these questions and we will do our best to categorize them and take them with us to the final Q&A of the webinar. Also, if you have any technical issues, we can give you technical support. Please let us know through the question box as well, and our team will send you a message aiming to resolve the issue. Like I said, we will have a Q&A at the end together with the speakers, and we've also asked you a question prior to joining the webinar, so more on that later on. As you know, some of us are broadcasting this webinar from home, so in the case there are any sounds, children, or outside noises, please excuse us for that. The webinar will be recorded and later on it will be put on the website of the Nordic platform. And you can see that on the top of the screen in bold, landing page. If you enter that website, you can also find all the other webinars regarding this platform. It's not only investor-related webinars, but also a series of Nordic corporate-related webinars. And the final point, now we know that we've scheduled quite a long time, so 1.5 hours for this webinar, and let's be flexible. Most of the speakers have about 50 minutes to speak. If we end a bit earlier, if we end a bit later, we hope you can bear with us in that regard. Thank you. So the agenda for today, I will tell you a bit about South Pole. Mikko, my colleague, partner, will tell you more about what Gaia is. And then we will tell you all about the platform and its members. Then we will follow with an introduction to the speakers, and we will dive right into the program. So we have two main charts. The first one is a presentation by the European Commission, followed by a presentation by Nordea. What we then do is we have a quick break. We show you a summary of a question that we've asked you prior to entering the webinar, and then we continue with the final two presentations, which are by KLP and NEFCO, and then we will go into a Q&A. So a few words about South Pole. South Pole is a Swiss-based climate consultancy firm specializing on climate opportunities and risk, serving capital markets, but also governments, NGOs, and more. We have over 19 offices globally with over 350 sustainability advisors, climate scientists, data scientists, and more. You might have heard of South Pole as being the largest provider of carbon offsetting projects globally as well. A brief overview of our locations, regional offices, representations, and also an indication of the areas in which we provide certified carbon emission reduction projects. Just to emphasize with one final slide is the sustainable finance arm of South Pole, where we work particularly with investors. We do that based on three different pillars. One is on TCFD advisory. The second one is on SDG impact analysis for financial products. And the third one is on net zero commitments, which can include scope 3 carbon footprinting, Paris alignment, and more. We also have an in-house team of experts that works with investors on interpreting and analyzing alignment with the taxonomy. I'll stop here for a moment and give the floor to you, Mikko, to explain about Gaia.
Thank you, Ingmar, and good morning to all participants. Good afternoon and evening, wherever you might be. It's really a pleasure to host this webinar series together with South Pole and Ingmar. And just a couple words about Gaia as an introduction also. So next slide, please, Ingmar. Gaia has, for the past 27 years, worked in different parts of the world, helping our clients to promote sustainable development, sustainable business development. So we work with businesses, we work with governments, NGOs, very much like South Pole. And for the past 20 years, we've been working also quite actively with the Nordic governments. The Nordic Council of Ministers is one of our key important clients. And some years ago, we had the pleasure to do a background study together with the Stockholm Environment Institute and New Climate Institute about where do the Nordics stand on climate finance, in particular mobilizing private finance and greening the financial system. And we identified several ways where the Nordics could and should act more actively. And one of the areas was definitely to share good lessons learned, good practices, and show leadership through leadership. And this platform was one of the recommendations. And since 2018, we've had the pleasure now to host this webinar, this platform together with South Pole. And it's going to be a pleasure to listen to all the excellent speakers, and hopefully we're going to have an active discussion moderated then by Ingmar. So thank you and welcome once again. Back to you, Ingmar.
Thank you, Mikko. Now, the final point I wanted to make from our side with Mikko is what exactly is the platform. And the platform is originated by a series of developments. So the first major development is obviously the new Nordic vision on 2030. And I wanted to read that quote for you, which is for the Nordics to become the most sustainable and integrated region in the world by 2030, combined with a series of principles, the so-called Helsinki principles that were launched recently, which state the principles support finance ministers to share best practices and experiences on macro, fiscal, and public financial management policies for low carbon and climate resilient growth. Now that together is supported by NKL, which is a working group under the Nordic Council of Ministers. They together lay the foundation for the Nordic platform for mobilizing climate finance. Now the platform itself, here you can see that all the Nordic countries are represented in the platform, and you can see as well that there are a different range of financial sector members in here. I just wanted to highlight that we also have the PRI, the Principles for Responsible Investment, who will be speaking during one of our webinars. We have the European Commission who will be speaking today, but also in different webinars moving forward, as we'll be covering topics moving further than the taxonomy. The final point, our goal today is to highlight areas where Nordic cooperation within the Nordic Council of Ministers can support the road towards carbon neutrality. So that basically means for us today to distill together recommendations on how Nordic governments can help or facilitate the EU taxonomy for investors in a Nordic context. Introducing the speakers very quickly. My name is Ingmar. Ramona, could you quickly open your camera? Say hi to everybody.
Hi,
Does that work,
my name is
Ramona?
Ramona. Yes, that works. Hello, hi, my name is Ramona, and I'll be supporting in the background.
Super, thank you. Emmanuel from the European Commission, would you mind opening your camera, saying hi to the audience?
Good morning, Mark. Good morning, Miko, and good morning to all.
Thank you. Ayla from Nordea and the Technical Expert Group.
Good morning.
Thank you, Ayla. Then we have Ash Sharma on board as well.
Hi, good morning, everyone.
Super. Now, Lars-Erik had some technical difficulties, so if it's not possible yet to share your screen, Lars-Erik, we'll wait a moment for you to confirm if that's possible.
I think, can you hear me now?
Yes, we can hear you well.
Excellent. Yeah, thanks. So I had a little bit of technical challenges, but finally it worked. So great.
Thanks, Lars. Good. Then I want to give the floor to Emmanuel to present on the most recent update from the European Commission on the taxonomy. The floor is yours, Emmanuel.
Thank you very much, Ingmar. Can you hear me?
Can hear you very well.
Excellent, thank you. So I'm just going to give you an update on the European Action Plan on Sustainable Finance and where we are heading to with the renewed Sustainable Finance strategy. So I will cover maybe a bit broader landscape than the taxonomy, but of course the taxonomy, as you can see in my next slide, is in the context of other actions. In particular, in the 2018 Action Plan on sustainable growth, we have the basic, as I say, that is the taxonomy, how to define sustainable activities, but then you can plug on this standards and labels, for instance, or disclosure requirements also. You all familiar, I guess, with the action plan, which is very comprehensive, trying to capture at the same time the opportunities of sustainable finance, but also the risks side, the risk related to climate and environmental degradation. And finally, to make sure we foster and improve the transparency on financial markets. Moving on to the next slide, I will just explain a bit how the taxonomy is built and what's our purpose with the taxonomy and who needs to use it. So as you know, the situation before we wanted to create the taxonomy was very dynamic in terms of taxonomy developments, but also we saw the risk of market fragmentation if all EU members start to develop their own taxonomies. It will create costs for the real economy, might be burdensome for investors. That's why we came up with this with the proposal on the EU taxonomy, which is a classification tool to help investors and companies to make informed investment decisions on environmentally sustainable activities. What we are aiming at with this proposal is to provide certainty for economic actors, to also anticipate the risk of greenwashing and make it easier for the real economy to have one unique set of definition of sustainable activities and prevent the risk also of market fragmentation. So that's why we came up with this proposal. And moving on to the next slide, our approach, thank you, is to have a quite comprehensive framework built on 4 pillars. First, to be considered as sustainable, an activity needs to make a substantial contribution to one of the 6 environmental objectives, which are the first 2 climate ones, so climate change mitigation and adaptation, but also the use of water, circular economy, pollution prevention, biodiversity. In the same time, to be considered as sustainable, an activity should do no significant harm to the remaining 5 objectives. So if you have a positive impact, for instance, on climate change mitigation, you should not have a two-dimensional impact on, for instance, circular economy or biodiversity. So it's a quite comprehensive framework in the sense that we want to capture also the negative impacts of an activity, not just the positive ones. To help investors and companies to identify what substantial contribution and do no significant harm means, the Commission is developing technical screening criteria, which are thresholds, metrics that will help for each activity to identify what being sustainable means in a very detailed way. Finally, as I said, our intention with the taxonomy is to be comprehensive, to capture all aspects of sustainability. That's why we have the last pillar, which is the social and governance safeguards, referring to certain conventions, ILO conventions, also OECD guidelines on governance, which makes sure that when you respect the taxonomy for green purposes, you don't have a negative impact on the social one. So that's the global framework. But now, who does it apply to? So it's my next slide. The taxonomy is mandatory for 3 types of actors. The first ones are member states and the union when we set public measures to create, for instance, standards or labels for green financial products. We need to refer to the European taxonomy. The second group of stakeholders that we need to apply the taxonomy are all financial market participants selling a product as sustainable in the EU. They will need to apply the EU taxonomy. They don't need to say that 100% of the investment is taxonomy compliant, but it's a disclosure regulation in the sense that you need to explain the alignment of your portfolio with the taxonomy. It can be 50%, it can be 40%. The important thing is that you disclose this information. And something that is being added during the negotiations is that all financial market participants, even though they don't sell a product as sustainable, will need to say when it's not sustainable that they don't take into account the taxonomy. So it's also a way to signal to the consumers that the taxonomy exists and that it can help them to navigate with their own retail investments. Finally, all large companies that need to apply the NFRD, the non-financial reporting directive, below 500, above 500 employees, will need to disclose how aligned their activity is with the taxonomy, the capex, the opex, and the turnover that are aligned with the taxonomy. We'll detail this later in the delegated act. What exactly are the indicators they will need to disclose against? So as you can see, we capture basically the whole value chain from companies that will need to disclose this raw information to financial market participants that will use this information to disclose how what they create is aligned with the taxonomy to the investors. And finally, we capture also the regulatory aspect with the member states and the union. Maybe just two words in terms of development of where we are with the EU taxonomy. As I mentioned in my previous slide, we have 6 environmental objectives. We have started with developing the delegated act, so the level 2 regulation. Basically, it's the line-by-line activities that are aligned with the taxonomy. To develop this, we have asked the technical expert group, as you probably know, that has published in March its reports on the activities that are aligned with climate mitigation and adaptation objectives. Based on this report, the Commission is now translating this into EU law with the delegated act that will be published by the end of the year. We'll publish in the coming weeks a consultation on our proposal. We'll then develop the activity for the remaining 4 objectives: waste, water, biodiversity, circular economy. We have to publish this by the end of next year. So that's why we have now created the platform Sustainable Finance, for which a call for application was ongoing until July. We are now reviewing the applications and we'll disclose the members, publish the list of members in the coming weeks. This platform will be, among others, in charge of developing the criteria for the remaining objectives. Finally, the platform, in terms of development also of the taxonomy, the platform will also need to work on if and how to extend the taxonomy requirements to brown, to shades of greens, and to social objectives. Basically, it will be to make sure that we have an enlightened opinion on whether it's relevant to expand the taxonomy requirements to these three new objectives. Now, moving on to the next slide, it's the link here with from the raw disclosure from corporates to the standards. Here, you probably know that we have asked the technical expert group to prepare their proposal on what a green bond standard would look like. I'm sure we'll say a few words about this. She has been leading the work of the TEG on this. Now the Commission is looking at all possible ways of developing the standards, also including, for instance, a legislative proposal on this. We have an ongoing targeted consultation on our website on the green bond standard, how it could look like, for instance, until the 2nd of October. And we'll see in the renewed strategy, we'll make the announcement on the next steps in the renewed strategy that I'm going to say a few words about this at the end. Finally, you probably have seen in her speech on the State of the Union last week, the President of the Commission mentioned that we will set a target of 30% of next generation EU 750 billion euro that will be raised with green bonds. So it's quite important news for this still rather small market, but is gaining in momentum very quickly. Now, moving on to the next slide, I would like just to say a few words about the non-financial reporting directive to cover the whole landscape of our initiatives in the last action plan. So, as you know, in 2014, the NFRD was adopted. It started to apply in 2018. But there are today questions around the quality, the enforcement, the priority, or the reliability of the information that are being disclosed. That's why the Commission is now considering to review the non-financial reporting directive. We'll make some announcement also in the renewed strategy, but not to lose time between the legislative process and the moment it will be adopted and implemented. The Executive Vice President Dombrovskis has tasked the EFRAG to already develop a standard on reporting, what sustainability reporting should look like. It will make sure that if we decide to go for a revision of the NFRD, once it's implemented, we will be able to have quickly a standard and be able basically to reach our 2030 target. So that's what I wanted to say about the current action plan, but now I would like to move to the next step, which is our renewed strategy. You've probably seen that in the European Green Deal, when it's a renewed strategy, it's basically due to the fact that if we decide to go for climate neutrality by 2050, if we also decide that we're going to cut our emissions by 50% by 2030, as announced by the President of the Commission last week, we need to step up our efforts to mobilize investors for sustainable finance and make sure we also include better the risks, we capture the risks related to climate change. Something important for us in this context is that the renewed strategy should also take into account the real economy more than we have done so far, in the sense that public authorities, citizens, companies need also to be involved in this project and to be better associated to this efforts. Since we launched the action plan last year. You will see in my next slide, you probably you're all aware that the context has completely changed with the COVID-19 outbreak, of course. And it's clear for us that it's a sustainability-related crisis, in the sense that we've seen the connection between human activities, biodiversity losses, climate change, and environmental degradation in a very obvious way with this crisis. So we think that even though it's a sustainability-related crisis, the solution is also sustainability, in the sense that we don't think that there is a trade-off between a speedy recovery and supporting sustainability transition. Sustainability is basically where our future economy lies. It's where future job and economic activities are. And also it's a way to prevent massive disruption and to prevent massive increased risk in the future. So now moving on to my last slide. That's why in our review, on our consultation on the renewed strategy, we built our thinking around 3 key pillars. The first one being the strengthening the foundations for sustainable investments. We've done a lot of work with the first action plan, but there are probably actions that need to be finalized, to be pushed to be fully operational, to be fully to be impactful. The second pillar is on increasing opportunities for all citizens, investors, and companies. And here we want to capture all the value chain of finance to give them at each step the opportunity to go green, basically, from retail investors to products such as securitization, capturing also, for instance, the pipeline of projects, and having not only an EU perspective, but also globally how we can scale up the efforts globally for sustainable investments. And the last pillar is on managing and integrating climate and environmental risks. We've done some work so far with the action plan, but we think we need to go a bit further to capture these risks and make sure they are managed by all individual financial institutions, but also globally at a more systemic level. We had the consultation until mid-July. When reviewing, we received more than 650 responses. So you can imagine that it's quite a massive response we received. It shows the momentum on sustainable finance. We received also 20% of citizens which responded to this questionnaire. So it's quite unusual for financial regulation, and we see that it's also something our citizens are expecting us to act on. We'll publish the strategy at the end of this year. That's all for me. Thank you very much for listening, and I'm looking forward for the discussion in the Q&A.
Thank you for the presentation, Emmanuel. You mentioned a few very important points. The taxonomy is a classification system, consists of a few different steps: substantial contribution, do no significant harm, minimum safeguard test. You mentioned that at the end of 2020, the other remaining goals will have technical criteria established, and you also touched upon recovery, COVID, and the link with sustainable transition. Thank you. Moving forward, also note to all the other speakers to keep on your camera during the presentation, and to the audience that if there are any questions, please post them in the box. Then we move forward to the presentation by Ayla Aho. Ayla, the floor is yours. Thank you.
Thank you, and thank you for Gaia and South Pole organizing this event, and thank you very much, Emmanuel, for a great introduction to this topic, which is evolving as we speak. So can we take the first slide, please? Next one. I start with a topical question about how has this recent crisis impacted sustainable investments, and especially the financing area, and if there can be any positive news in this phenomena, then it is that it has clearly accelerated interest into sustainable finance. On the right side, you can see the assets under management under the Nordic Climate and Environment Strategy, And just about in 2 years, there has been a phenomenal growth. And the same increase in demand has been seen by the whole market in sustainable products. It is also supporting the earlier research that has found that companies that have invested in good ESG performance have actually performed better in terms of return on equity, in operative profits, and also with less volatility in their share price. All this has now seems to be holding during this crisis. So the money, the investments are flowing towards the sustainable sectors of the economy. This means that the sustainability is also a source of product innovation and new income for many sectors and companies. So with sustainable finance, it's finally starting to integrate with the real economy. Next, please. I'm going to use Nordea as an example here in my presentation on what has been going on. And here's an example of our asset management climate change strategy, very much based on aligned with Paris Agreement and TCFD recommendations, and the 5 steps of integrating all the voluntary commitments on the left side that we have done. Most market, Nordic market is aligned with these targets, integrating into our own research, risk opportunities, active ownership towards companies, divestment if no adequate change can be witnessed, and also supporting migration and mitigation, offering new products, and offering policy support. All this is now something that has been based on voluntary activity by the market, which has been going on for some time. Now, the regulator and the policymakers have actually catched up with the market development and now actually taking the lead, as Emmanuel just explained. For example, through the taxonomy legislation, disclosure legislation, and all the other amendments proposed and implemented in the financial action plan, and then also amplified in the next version. Next, please. This is a picture of our climate change funds. Practice for an investor, it is a decision: shall I buy or shall I not buy? If I have bought, shall I sell or shall I keep? So it's a little bit black and white. There's also a way in between: keep on conditions. And in terms of climate change mitigation, anything to do with fossil is by definition on the sort of sell side, unless there is a way shown by the investee that they are investing and planning to be the emissions budget. Next, please. And I will come back to that picture, but that was just the sort of as-is situation. Until now, I've been talking about the investment arm of the bank, all the asset managers and managing other people's financing. We see this growth in demand for sustainable products also from our bank lending customers, both private sector, households, and businesses. So we have a green housing loan, green business loans, green car leasing. All these have been developed because there is demand from our customers for it. This is particularly a Nordic phenomenon. I think that our societies are front-running on this. We have a good heritage, Nordic heritage, to be sustainable, live close to nature, understand nature, and this principle of being equal. And so it's a good continuation of that. But it still has been very, very promising and positive that our customers are really asking for green loans. And one of the first products, if you want to next slide on this side, was green bonds. And the green bonds, next please. And the green bonds have been growing also, and in the Nordic sector, Sweden is really leading this, and it's one of, if not the leading country in the world in terms of share of green bonds out of the total bond market in Swedish krona. From the total Nordic market, Sweden is still ahead with almost half. The other countries are catching up nicely, but there is still room to grow. And the EU Green Bond Standard that we developed in TEG and our recommendations hopefully will establish a golden standard for this market. There has been some question, what is green? Can I issue green without being accused of greenwashing as an issuer? So the standard, which is based on taxonomy aligned green activities, should take away these hesitations. If it's something that is enshrined in the regulation and law in EU, then by meeting that, you are really best in class. Having said that, we can come back to that a little bit more in the practical terms in the next couple of slides. And this is just a question of how has this greenness been defined and sustainability. There's hundreds of brands and ways of defining this. And this, as I said before, has been a little bit of a challenge for issuers and investors in the market. A big part of this environmental, social and governance performance has been to evaluate how a company is managing their business in terms of various international commitments, environmental laws, management systems, what have you. Unfortunately, many of these ratings are not comparable, and it's very, very difficult to assess their credibility and assess the quality in an automated way. So it's a very manual intensive, inefficient way of managing sustainability. If we want to make this mainstream, it needs to be harmonized and standardized. Otherwise, we can't analyze the data in a efficient way. More advanced, which typically is combined with the floor kind of a how part, is what part, which is very relevant. For example, at the moment, it will be very, very difficult to find anyone who wants to finance coal-based operations. So if a business model is not sustainable and future-proof, then investors will hesitate. Even more next level is going for the actual financing positive impact, and at least be aware of what environmental impact my financing has. So connecting the finance with the real economy environmental impact. That is the latest trend, which is accelerating fast and kind of bringing finance closer to the real economy, which is of course, next please. And this is exactly what the taxonomy does. It is focused on the environmental impact, what has been agreed to be the most critical things. I haven't seen anyone criticizing that these 6 items selected for the taxonomy would not be the most important and relevant ones in terms of environment, conservation and sustainability. And it was great to hear Emmanuel saying that you can perhaps say that this taxonomy has so far has been running a little bit ahead of the real economy sectors. Now it's in a new Green Deal and in the recovery financing to start aligning the real economy legislation also in line with the net zero target by 2020, which is what we need. Next, please. I also need to accelerate a little bit. I see the clock ticking. The taxonomy in terms of climate change mitigation and adaptation has 3 categories for the mitigation. So the activities which are already low carbon and are expected to stay that due to their own merits already now until 2050. Renewable energy, anything that is zero carbon. The other sectors are those transportation, housing, a big part of manufacturing, which have a major part of our carbon impact. So those need to transform and transition if we are going to meet the 2050 target. But there's still such a long way to go. But if we would put the targets now, it's too far for anybody to react. So there's transition activities which will have criteria that will change, let's say, every 5 years, gradually going towards the net zero. And this is a very important concept to understand. So as an investor and as a company, you need to understand where are you on this curve. Are you already low carbon, or what part of your activities are low carbon, or possibly are you contributing to the emission reductions in the other sectors? That's also one way of being taxonomy behind. Or are your activities subject to this tightening criteria? And then it's a strategic decision where to place yourself. What is the your company strategy? What the taxonomy does is enforces all the companies, as Emmanuel explained, to be transparent about their taxonomy alignment. So transparency is the driving force. As a motivator, on the right-hand side, I've copied a picture from our equity research, where they have made a proxy small basket of taxonomy-aligned Nordic companies. And as in the overall market, have the taxonomy-aligned companies have really performed better during COVID compared to the rest. Then one more slide, next one please, going a bit more deeper on what does this substantial contribution and neutral and harmful, which are the concepts introduced by the taxonomy. What does that mean? And here an example on the climate change mitigation. There already green, the part that substantially contributes is something that you can measure with CO2 intensity, for example, in energy production, under 100 grams per kilowatt hour is the measure, which is the substantial contribution. In practical terms, solar, wind are there. Natural gas is not, unless there's carbon capture and storage used for that. Then we have an area, there's a lot of activities, let's say service sector and media, other social services, which are neither substantially contributing, but are not harmful either. Their impact on climate change, which is the target question here, is not really relevant in terms of the total market. However, what is very relevant is those that are significantly harmful, which is below a certain threshold. And then you do this exercise vis-a-vis all of these 6 targets, you start to have a good mapping of the floor. And I would say that this establishing the floor for being significantly harmful is really an important concept, which the green market until now perhaps has not really fully. We have focused on the substantial contribution, which is great, but now integration of the harmful for the other targets really makes it very robust and so. Also much more work for all parties involved. And if we can take the next slide then. So what we need to do in the financial sector, whether we are investors or investees, whether we are asset managers or lenders, we really need to understand what our companies are, the customers are doing, what part of the activities they perform. We can identify that they are sustainable, what on customer level, on sector level, and activity level. Integrate this information into our existing business choices and risk management systems, and also, as said, create new products to facilitate growth migration. And of course, on the right-hand side, we can see that for lenders particularly, this is not only about business opportunities, these targets are going to be firmly integrated in the risk management frameworks, and some of the initiatives ongoing there, which are part of the action plan, and as we heard Emmanuel saying, be an important part of next steps is integrating these sustainable choices and risks to lending and banking regulation. ECB, EBA, ESMA all doing their share. So you can see almost every day new studies and research and various task force and working groups on that front. It's going to need a big willingness and investment in learning from all of us, and taxonomy is a good start. Study on that, it's freely available, just download it currently in tech proposed format and very soon also published by the Commission by the end of the year. So from my part, I wish you all good luck and a lot of motivation in this transition. Thank you.
Thank you, Ayla, for your presentation. That was very insightful. Just a few takes from it. You mentioned climate-related assets under management have grown on Nordea's side. You mentioned policy and legislators are taking the lead to running ahead with the taxonomy, the rise of green bonds. You mentioned the competitive advantage and return rate of Nordic aligned companies with the taxonomy. You emphasized the importance of do no significant harm next to substantial contributions, so do no significant harm to the other environmental objectives. And you closed with the note that it's an investment and we are on a learning curve together with the taxonomy. Now, time for a 1-minute break before we go to the next two presentations. And we wanted to give you a quick update on the question that we have asked you before and the results that came in. So we've asked you one question, and that is there a role for Nordic governments to facilitate the EU taxonomy for investors? We had 32 respondents, and as you can clearly see from this graph, according to them, there clearly is a role. Now, the graph itself doesn't say that much, because the thing that we want to know, obviously, is what role would that be? So this is a question that we will be discussing during the Q&A, together with the questions that we have been receiving by you in the question box. And what I want to ask you is to, during the next two presentations, is think about what would a role of Nordic governments be in facilitating or helping investors with understanding and implementing the EU taxonomy. So what is this role according to you? And what I would like to ask you to do is to write down that role in the answer box as well. And then at the end of the run, we will see what came out of that. So that in regards to our brief break, we will continue with a presentation by Lars Erik from KLP, also on the taxonomy. Lars, the floor is yours. Thank you.
Thanks very much. Can you all hear me okay?
We can hear you well.
Good.
Yeah.
Great, thank you. So first of all, thanks very much for inviting us to talk on this event. You can just take the first slide, please. So I will give a little bit general background and some examples on our climate change work. Then I will briefly present some of a sort of like case study that we done regarding the taxonomy. It says screening related to the taxonomy. I think that's a slight oversell. It's more about our best effort in trying to do a portfolio screening in the direction that we feel that the taxonomy is working towards. And then I will conclude with some reflection about data and science-based approaches. So next slide, please. This was, I think, a different version on the same slide that was shown by Emmanuel on this double materiality. So I will not, I think this is a very known perspective for the audience, but I will just quickly go to present it. And that is that two perspectives that we have on our climate change work. So the one thing is what we call a climate stewardship perspective. That's basically work that is motivated by us trying to have a positive impact on global warming and the ability for the global community to achieve the goals in the Paris Agreement. So it's not philanthropy, it's a way for us to try to combine meeting our financial objectives while at the same time also trying to have an impact on the climate. And the second perspective is the pure climate risk as a financial risk perspective. These two ways of looking at it can of course overlap, but not necessarily always. So we are trying, at least in some instances, trying to keep these two perspectives or these two objectives a bit separated. So we are not, so we are doing things for the right reason. So one example I usually like to bring in this regard is that from a climate stewardship perspective, you would always want more renewable energy, for instance, always more of the green, because that's positive for emissions. Well, but it's not the same to say that green is always have the lowest climate risk. In order to assess that, there's a different approach to it, and in many ways, green can also have a high climate risk. So we've seen some examples from Norway. So that's just one example where that sort of like explains why we like to keep this a little bit separated. And I just want to be clear that in the following presentation, I will only talk about our climate stewardship work. Next slide, please. So this is part of our KLP strategy, and you see on the left side the mission, and these are examples of the different instruments and the impact that we are seeking to have on the climate change domain. So we basically have 4 main instruments, and I will go through this in the next slides. I will not go through this in this slide. And the ultimate goal, which is a little bit interestingly formulated, is that we want to achieve the climate goal. So we're not trying just to contribute to and support. We are actually trying to we have put the ambition at least to try to have a real impact. And for those that have been following some of the discussions around different Paris alignment tools and what really have an impact, I think that's quite an interesting discussion. And in that context, we also think it's very interesting and very much welcome the work of the European Commission lately. Next slide, please. So the first example I will do is around engagement, and I think for many of the people in the audience and also of the panelists, this is a key measure that we have in our toolbox. We do a lot of different sort of engagement on a collaborative arena, such as the portfolio decarbonization initiative and the different working groups under the PRI. So one example I brought here is what work we do on deforestation. So we have quite an extensive, or had also quite an extensive focus on deforestation, both related to palm oil in Southeast Asia and soy now in Brazil. And the picture I show there is actually a collaboration we had with some Malaysian banks, where we have been engaging with Malaysian banks and trying to assist them in their work in integrating deforestation issues into the credit contracts with their clients. Next, please. The second one is integration, and that's of course a very wide one. And basically, integration refers to integrating the climate change perspective, both the stewardship perspective and the climate risk, of course, in all relevant parts of the organizations. But the 2 examples I put up here, the first one is our divestment policy, which since last year had set a 5% revenue threshold on coal-based activities, which means that by the Scandinavian standard or the Nordic standard, the KLP now have a coal-free portfolio as well as a tar sand-free portfolio. Currently, we're working on quite an extensive work on trying to figure out what Paris alignment actually means for KLP's investment strategy, and also portfolio composition moving forward. So that's work that we're currently undergoing, and which will have, of course, implication for a lot of the operations of KLP. In the next slide, I just brought an example of okay, the black boxes there. I will explain. So this is the 4 different TCFD reporting indicators. The weighted average cost of what is called the WACI, the weighted average carbon intensity, the carbon footprint, and the carbon intensity. Those are the ones which is shown here in red, green, and black. And we have been measuring this for all the listed equities and listed bonds in KLP. And they are typically spread now between 30 different funds. So we have made these indicators for each of the fund, and we have made an aggregated indicator value for KLP. So basically the 3 indicators I mentioned here from 2010 has had a very positive development. We see, I think it's about 70% reduction or improvement in carbon intensity since 2010. And from this calculation, we have found that roughly half of the development in this indicator value comes from, let's call it, natural decarbonization in the market, and half of it is related to adjustments in KLP's portfolios, basically. During this period, I think we have had a 4 times increase in our asset under management, and this also explains the gray indicator, which is the total carbon emissions. So the total carbon emissions will naturally grow as your asset under management grows, but luckily our asset under management at this period has grown with 400%, and this indicator value has grown with 25%. So luckily we have some sort of some correlation, but not too strong correlation between the asset under management and the total emissions. Next slide, please. Then we are also working on developing new products, and I think that was also very well presented from the previous speaker. So we do have a bank business as well, but it's not as big as our investment arm. So, but within our bank, we have also introduced now green loans, which gives a certain discount on the interest rate if you fulfill certain requirements on green housing standards. But I think what is perhaps most important to bring forward, especially to this audience, is that we also have now a family. I think it's about 6 Swan labeled funds, both equity funds and bond funds. So the Swan label, of course, it's very known to the Nordic audience. We have seen it on our soap, on our other type of products. And for many are also familiar that they introduced a standard, I think it was about 4 years ago. So in the context of the taxonomy, I think that's quite interesting, because the way the rules are set out for these funds, the different criteria and requirements and the application of ESG data, I would say it's very different from the thinking of the taxonomy. So it will be very interesting moving forward to see how these 2 standards will harmonize. And if you look at the next slide, I brought an example here on one of the Swan label funds, which is a global index fund. So just need to check the legend. So the blue is the Swan label fund, and the orange is the original index fund. So this is a global index fund that tracks after MSCI World, and the orange one is the traditional one and have a very low tracking error. But with the Swan label fund, it's completely fossil free, it's completely weapon free, there is both a negative screening where 1/3 of the lowest performance ESG stocks are removed, and the top 1/3 ESG performers have overweighting. So it's quite a substantial deviation from the index. But yet, as we try to show here, we see that the Swan label fund in blue tracks the index fund in orange very well. And in this graph, we have a represented tracking error below 1%. And actually, what's also interesting is that the Swan label fund has an excess returns of 4% during this period. This graph is a little bit old. It's about 6 months old. So actually now, and after COVID, the excess return is 8%, which is quite good. And everyone will think, well, that's great. And I personally think it's great, but it's also some concerns of the portfolio manager, because the objective of the fund is, of course, to track the orange one. But I guess nobody really complains when the fund is doing well. And let's see if that turns. It's only 2.5 years since the fund was introduced. Next slide, please. So the last one is our green investment mandate. And that investment mandate, if you look beyond the Swan label funds that we have in our listed stocks and bonds universe, this relates more to infrastructure or direct investment in infrastructure and predominantly renewable energy. So we are both quite a substantial holding in Norwegian-based renewable energy, which is to a large extent hydropower. But over the last years, we have also developed competencies and engaged with partners to form very effective collaborations that has enabled us to also invest outside of Norway and also entering into more, say, frontier markets for us, such as different countries in sub-Saharan Africa or Honduras, for instance. And much of that thanks to either collaboration with development finance institutions such as the Norwegian Norfund or other similar DFIs around Europe, and through different blended finance structures, basically, which reduces the risk for KLP. So these have been quite successful, and we have a mandate to increase the green investments with about 6 billion Norwegian kroner every year. And when we are investing into renewable energy space, we also make sure that we are not entering into refinancing structures, that we are actually trying to contribute in new capacity development. Okay, so this is just to give you a very brief overview of some of the work that we're doing. And on the next, I will go a little bit into this EU Taxonomy screening. Next, please. So this was, I just want to mention that I have not done this work. So I'm presenting my colleagues' work, but hopefully I will do that fairly well. This work was initiated under the PRI working group, and it was it was about 40 different institutions that came together to try to do taxonomy-related screening. I know that there was a lot of actors that had maybe a couple of green bond portfolios, for instance, which I think it's probably a bit more practical in the sense that if you have renewable energy or buildings, you do have accessible some screening criteria data, most likely. So what we really try to do is to do a sort of screening of our global index fund. So it's actually the same I presented in a couple of slides earlier. Not the one which is Swan labeled, but our traditional global index fund, which tracks after MSCI World. So this fund consists of 1,500 companies spread mostly in the OECD. And the question ask yourself, and this is, I guess, a general question we ask yourself after we, saw that technical screening criteria in the taxonomy is, where will we get the data from? Because we don't have this sort of data today. Yes, we have emissions data. 80% of the data is estimated data in the global database, and we don't have output data. So we don't have data for instance, ton produced steel, ton produced aluminum, etc. So basically what we've done here is that we're just using our best effort, and we have applied MSCI ESG data to do the screening. So it doesn't fulfill the technical screening criteria. This is just a way for us to say, okay, this is the best way we can do this today, because we don't have the data. So it's not really a proper taxonomy screening, it's just a best effort study. Next slide, please. So if you look at this under the EU requirements, we have listed the different requirements, hopefully correctly. And then we have on the right side solutions using MSCI ESG data. And the specific data we've used is not actually the conventional ESG data from MSCI, it's what they call the sustainable impact metrics. And if you look at the top green box there on the right side, you will see the definition of what comprises of sustainable impact metrics. And you will also note that it's actually covering more than just the taxonomy mitigation. It also goes, for instance, on pollution prevention, natural capital. So basically what we've done is that for the technical screening criteria, we applied then the sustainable impact metrics. For the do not do no significant harm, we screen companies for controversies and global norms. So basically the extent to which that there has been some media reportings that indicate or suggest that a company may be breaching some international norms, such as severe environmental degradation or human rights violation. For the social safeguard assessment, we also apply the global norms database. And in order to determine alignment with the taxonomy, we obtain from MSCI a revenue, percentage revenue estimate that is associated with the sustainable impact metrics. So it's sort of like a little bit similar to the thinking of the taxonomy. And the result is that approximately 5% of our global index fund was aligned with the impact metrics. Now, this is, of course, again, not a realistic screening exercise. We have no idea what the correlation is between the impact metrics and the technical screening criteria. My personal gut feeling is that that correlation may be quite small. So in that sense, this was more the value, I guess, from doing this exercise was more to sort of like just show, using our best effort, how would we go about doing some sort of screening of the positive impact of our portfolio. Final slide, please. So I will just finish up by some reflections. So I think, as I also mentioned earlier, we really welcome the work by the EU Commission, and also the speed in which it takes place, which is maybe a little bit stress factor for our legal department, but for us that's been working in the field of sustainable finance, it's really, really exciting times. And I think that the taxonomy really represents a paradigm shift regarding the availability of sustainability data. And I think, you know, as mentioned, we don't really have this output data. And what that means is that it's very difficult for your complete portfolio to connect the performance of a company to the objectives of society. We do have the PACTA tool, there are some tools that are out there, but we are not able to cover our whole portfolio. So this, for the EU-based companies that will be subject to the reporting requirement, will be solved by the taxonomy. Our only concern would be how we as a global investor also may cover companies outside the EU. I personally hope at least that some non-EU based companies will see the merits in reporting according to the taxonomy, but most likely it will not be the complete investment universe for us. Whether that data will be available by service providers such as MSCI, Sustainalytics, ISS, etc., remains to be seen. I certainly hope that certain measures will be taken so we can have a complete measurement and avoid biases in the way that we measure sustainability in our portfolios. Now, the final point of reflection is it's more about a curiosity, and that curiosity arose especially after seeing a draft of the SFDR directive, the reporting directive, especially those that relates to biodiversity, water-related risks. There was requirement to, or suggested requirements that you need to do some sort of spatial analysis of the company. You need to know what activity a company have, which is adjacent or within areas of certain conservation status, biodiversity status, or water stress levels, for instance. And that is extremely interesting. And I think in order for assessing these sorts of risk more, effectively, you actually need to know the spatial location of the company. And so it will be really interesting to see how the Commission go about addressing the taxonomy in this respect, because location matters. For mitigation, location matters less because emissions are emissions and they are global for most parts. But for nature-related risks, that's very location-specific. So if you want to really assess that sort of risk, you need location-specific data. In the next slide, and this is the final one, I will just provide an example of some of work that we have done in this regard. What you see here, the different, what do you call it, circles, are locations of some selected companies on the Oslo Stock Exchange. So we have mapped the location of the main index on the Oslo Stock Exchange, but this is just showing the locations of a few companies. And then we have overlaid their location with multi-hazard risk exposure data. So that's data regarding, or historical frequency data on tropical cyclones, floods, and landslide induced by precipitation. So this is of course a very simple overlay, but this is an example. So say for instance, for these companies, I wanted to have an opinion of their exposure to physical climate risk events. This sort of data will give me a much better information and also give me the ability to conduct a deeper analysis of their risk exposure and to that effect KLP's risk exposure. So I'm not saying that this is the ultimate solution. I guess what we are trying to say is that we are at least very curious to see how the Commission will go about addressing the reporting for the other taxonomies as well. So I think I'll stop there. Thank you very much for your attention, and I also look forward to the discussion.
Thanks so much for your presentation, Lars. You mentioned the taxonomy is a paradigm shift. You mentioned a few challenges, but also the opportunities of the taxonomy. A challenge could be to connect company performance with the goals as laid out in the taxonomy. And you also emphasized the upcoming of SFDR as well. Now, we are aware that we are far advanced in our time. Let's move on with your presentation, Ash, and if possible, try to stay within 10 to 12 minutes. Thank you. The floor is yours, Ash.
Hi, can you hear me clearly?
We can hear you well, yeah.
Great, okay, thank you. Yes, I'll try and keep it short. Okay, so I'm going to talk about NEFCO and the EU taxonomy. First of all, thank you to the Nordic Council of Ministers, to South Pole and Gaia for this invitation. If we go directly to the first slide, please. Okay, so what is NEFCO? NEFCO is the Nordic Environment Finance Corporation. So green is very much in our DNA. We've been working with this since our inception 30 years ago. This is nothing new for us. I think that the EU taxonomy offers a number of very important opportunities for the market as a whole, and we'll come on to those. But what we're about really is is facilitating this green transition and tackling the climate crisis. Next slide, please. So the main sort of focus areas that we work with really are green growth, climate, the Baltic Sea protection, which is very important in the Nordic region, and also the Barents and Arctic areas. So we can skip this. And so how do we contribute? So we are a green bank. We finance green and sustainable projects, typically small and medium-sized projects, and these are outside the Nordic countries. We typically finance through our own investments. We have a number of investment vehicles and product offerings that we use on market terms, and we also provide management of external funds, trust funds, and we work with incentives, for example, in the carbon markets, and also with SDG 7, a current project program that we have called Beyond the Grid Fund for Africa. We also work with blending instruments as well. Next slide, please. Okay, and you can skip this also. So the Nordic Environment Finance Corporation is a publicly owned organization. We are driven very much by not only through the ownership of Nordic countries, but by the Nordic priorities. And these are outlined in the Helsinki Declaration for this road to carbon neutrality. And of course, we adhere to the principles up to the Nordic Cooperation Vision for 2030. So what we tend to do through our activities is to promote and to demonstrate and finance the scale up of Nordic technologies, Nordic environmental solutions on global markets. And we work together with the relevant public and private partners. Our financing is primarily towards the private sector, but we do also work with public institutions, for example, in Eastern Europe extensively. Now we've decided to, NEFCO has decided to embrace the EU Taxonomy framework as its primary classification system to screen projects which are considered environmentally sustainable. And I would add that the whole raison d'etre of NEFCO is around this green space. So the screening and the environmental work that we do has been part of our modus operandus for the longest time. So what we're trying to do really is to align more with the EU taxonomy. Next slide, please. So the environmental priorities that we are talking really here about are accelerating the green transition, working towards this carbon neutrality that we mentioned, the sustainable circularity, the bio-based economy, and the Nordic countries have been aligning their priorities within these areas. And this is really where NEFCO is here to support. And of course, as you know, the Nordic countries have set out very ambitious greenhouse gas reduction targets. So we're very committed to the Paris Agreement, the UN Sustainable Development Goals. So let's not forget about the whole co-benefits that we hope to support, and of course the Convention on Biological Diversity. Next slide, please. So what does this mean for NEFCO? Now, of course, this is very much a relatively new creation, of course, and we have been working with environmental processes and reviews for many years now. And of course, I think much of this has already been covered earlier in this webinar. But what we hope to use the taxonomy as a tool to promote investors, organizations such as NEFCO, but also more importantly, I guess, companies, bond issuers, project promoters, to navigate this transition towards the low carbon, resilient and resource efficient economy. It provides investors such as NEFCO, but also more broadly, with a common language to identify those common economic activities which can be considered green and environmentally sustainable. So what I'd like to do, if we move to the next slides, really is to take this forward. So we have, for example, the principles around this, the criteria, the thresholds. Of course, we've talked about the do no harm principle. But what we're trying to do at NEFCO is really to work with this taxonomy by taking forward detailed guidelines, which we've been working on for some time. Our environmental and technology department is working on this to try and operationalize some of these activities. And we, of course, look to rate these projects in standardized ways and to take those forward. And what I'd like to do is just to give two very brief examples. We don't need to go into too much detail. Hopefully we can have time for questions later. But to look at two examples, and I'd like to touch on two in relation to circularity and the sustainable energy opportunities that we have. So the first is an Icelandic example. It's Carbon Recycling International. It's an organization which was established in 2006 and is working very much at the forefront. So here the key words really are around green technology and innovation and the deployment of that technology. So what we can see here is an organization which has been working with an industrial scale plant which it developed in Iceland. It's working with methanol, trying to take this forward with the new methanol and hydrogen economies that we hope will be a part of our transportation future. We see that they are looking to cover the full range of renewable methanol, and they've been selling certified e-fuels across the Renewable Energy Directives market since 2012. They're looking to scale up, and this is where NEFCO has come in. We will seek to provide them with a convertible loan. Could we go to the next slide, please? So here we're talking about moving from the linear economy towards the circular economy, turning the CO2 from a byproduct, a waste, if you will, towards a resource. And they are looking to use an emissions to liquids technology, which I can better explain on the next slide. So what we're looking to do here, or CRI is looking to do, is to capture CO2 from industrial emissions using renewable energy sources, providing the emissions to liquids platform and producing a renewable product, in this case methanol, which can be used for transport, but also as a feedstock in the chemical industry. Go to the next slide, please. So actually, we can skip this slide as well. It's a technology platform that we're looking to use. But if we talk more about the projects and what CRI is hoping to achieve, we can see that through electrolysis, the project on the left-hand side relates to a program in Norway, which is under construction. And here we're looking at
Ash, I think we lost you over there. Ash, I will continue with the slides, wait for you to come in, and go directly to the Q&A if your connection comes back in.
Sorry, we won't discuss the Chinese example, but it's very similar, and it's an industrial symbiosis program.
Okay.
So very briefly, the final example really is about, I think here we can look at a key issue here about mobilizing finance. And this is one of the points I'd like to make, is that we have the opportunity. This is a Green Climate Fund program. So NEFCO is the first and only Nordic institution working with the Green Climate Facility, the fund. And here we're looking at mobilizing funding. And here we have a leverage ratio of around 3 to 3.6 to every dollar of funding from the Green Climate Fund. This is part of, let's say, a larger program which involves a complex finance restructuring, which is ongoing. So we're introducing senior debt, contributed equity from the program, but also bringing in social impact investors and public results-based financing. It's a very innovative project. We don't really have a lot of time to discuss it, but I think the key issue here really is about mobilizing funds at scale. So I think I'll conclude here, and hopefully we'll have more time for the discussion.
Thank you, Ash, and good that your connection got back again. So I know that we told you in the beginning phase that we would also address questions from the audience. We've decided to categorize them and to get back to these questions through email. So we will post them to the speakers and then get back to you with the answers. That's also for time considerations, and that brings us to the final part of today's webinar, which is really the main aim for the Nordic Council of Ministers, is to get an idea of what on a Nordic governmental level could be done to help the Nordic financial sector take steps in understanding and implementing the taxonomy. And as we've seen from the first poll, most of the respondents said there clearly is a role. So let us spend a few minutes together with the speakers on, if there is a role, what exactly could be instruments or examples for Nordic governments to help out or to support. And Ash, since we have you unmuted in the first place, would you mind sharing a few thoughts on this question from your perspective?
Well, yeah, I think there is clearly a role for the Nordic government to play, and I think platforms like this are a key part of that. And I think that the opportunity that we have to bring together the various actors to share good practice, to share knowledge is critical. That's one point I would make. I think also to encourage the corporate and investor communities to get together, as we've done on this call, for instance. But I think one point I think was raised by Lars Erik was very interesting for me, and I think that when we talk about mobilizing funds at scale and bringing some of the institutional actors in, I think this is a key role for the public sector. I think he mentioned that KLP is looking to work with frontier markets, maybe markets in which they're not very familiar, willing to take risks, but of course they have pension funds and other stakeholders to satisfy, and I think therein lies the opportunity to buy down a lot of that risk and to work with the DFIs, to work with organizations like NEFCO, to work with the public financing, which can be used to buy down risk in some of the innovative blended financing structures that we see. I think is a key opportunity. So maybe I stop there.
Thanks, Ash. So if I may summarize, so engaging in collaborative concepts and setting up engagement platforms, engagement through webinars, these could be practical things the governments could take up. Since Ash referred to you and KLP as well, Lars, would you mind sharing your viewpoint on the role of the potential role of the Nordic government?
Sure. So yeah, of course, I will obviously echo what Ash just mentioned. I think that is a tremendous opportunity for the Nordic countries and to really finding the right structures in scaling this, catalyzation effect that they can have in mobilizing private capital. So since Ash already mentioned that, I will try to mention something else. And I think that what we see, and I can only comment from a Norwegian perspective on this one, but what we've seen as a big difference between the Norwegian way to handle the COVID and the European one is quite a stark difference. The EU is using COVID as an opportunity for accelerating the green transition by using stimulus packages and other measures on economic actor, but focusing on the taxonomy. And I think that is really, we can have all this regulation of the financial sector as we want, but that alone will not really push it in the direction and speed that is necessary, in my opinion. I think we need to have all the measures that is coming from the EU Commission, but it needs to be coupled with incentive structures, different tax innovations and changes that also apply to the sector in which we invest. Because it is actually, just as Ash mentioned, we as a pension, from a KLP perspective, as a pension fund, we also have an obligation. We have a very low risk tolerance. We are conservative. So we are not going on just throwing ourselves out on green endeavors. We need to make sure that we can satisfy two objectives at the same time. We need to have a high and competitive return, while at the same time, we also have this climate stewardship agenda. And we need to make them work in tandem. And so far, we have been able to find, say, win-win situations. But it will be much quicker if you also have incentive structures in the market in itself. So by having different stimulus packages or different, maybe you could envision some sort of Nordic collaboration on fostering EU-aligned activities and using different measures that is in the public toolbox in order to accelerate that, and making sure that the regulation that is now applying for the financial sector has an effective regulation that works in tandem with the different sectors. So I think that would be my second point.
Thanks, Lars. Yeah, so key point is it's an opportunity potentially supported with stimulus mechanisms. So not only focusing on legislation itself, use the public toolbox. That could be through tax innovation. Perhaps any other example of this public toolbox that the Nordic governments could facilitate or use in this regard?
I wouldn't go too far into the political domain, but I think that you need to have a green sort of tax change one way or another, and most likely that would need to both have a stick and a carrot, in my personal opinion, not KLP's official opinion, but in my personal opinion, I really think so. And I think you need to think much broader than mere carbon taxation and emission trading schemes. We need to make sure that we have the right structure that really incentivizes the transition activities. And I think in particularly the transition activities has gained a lot more focus, especially much due thanks to the EU Commission. We not only have this green bond market now, we also have the sustainability linked bonds, which really incentivizes the company to accelerate the transition. And I think that should be a primary focus, maybe, that we give the right incentives, that we make sure that the frameworks are there, that the investment decisions is going in the direction that the EU Commission wants, and that would sort of like increase the alignment with the taxonomy. So I don't want to be too specific, because in Norway, so it can also be a little bit political. We have a large oil and gas sector, and so I think I'll just stop there. But it's not necessarily our table to have the best advice on governments on how to provide the right tax incentives system. But I think it's appropriate for our position to sort of like note that, we see a lot of regulation coming to the financial sector. We welcome it, but we would also like to see similar priorities being made on the other sectors, so we can really collectively work in a profitable way in a green direction quicker.
Thanks, Lars. Thanks for sharing that. Ayla, what is your take on the role of the Nordic governments in facilitating the taxonomy?
Yes, thank you. There has been a lot of good proposals already, and I would maybe summarize in 3 points. First of all, they have a role to play in making some data available, reliable, easily digested digital format data, buildings, energy efficiency, and whatever is there as the requirements for taxonomy, so that the evaluation of the environmental impact is made easy and credible. Also, education about the subject and how this should be applied is also the awareness is growing, but there's still a way to go. And the other point is, as Lars-Erik also mentioned, and the others, that of course the financing is just a mirror of the economy. Actual real economy needs to change. So these need to be aligned, whether it's through taxation or some other incentives, but the legislation and the targets need to be aligned. I see that in the Green Deal as a target, but also hope that the member countries actually stick to that thinking and don't start to look at too much with their own individual eyes, if it happens. Then perhaps most important, where they could have a biggest impact, is to take the taxonomy or the environmental impacts into consideration in their own actions, whether that is in their own fund management, central banks fund management, or sourcing guidances. So currently it's a little bit of artificial to have a lot of legislation and targets in politics, but when they make decisions on how they spend their own money or the criteria, the environment is still not there yet. And the taxonomy may not be applicable in all. It is indeed a very narrow part of the economy that is already taxonomy aligned. So what we need is to get a bigger part of taxonomy aligned and use resources for that. But at the minimum, one should make sure that this do no significant harm is respected. So if you can't create substantial contribution, at least make sure that there's no substantial harm. That is in the interest of all of us and should be an easy thing to explain also for and the EU Recovery Fund is the first step really there. It has been a lot of money at stake there. Member countries can apply for it, and it's supposed to go for green investment. So now it's really the time to show that we have these good investments and we have these good ideas. Because if the Nordic countries don't have those, then there's a lot of talk about it. So I think we really have to grab this opportunity, and it's a joint by public sector and private sector, not one or the other, both. Thank you.
Thank you, Ayla. Making data available, focusing on the real economy, focusing on your own activities in this regard, central banks, for example. Strong points. Thank you. Emmanuel, acknowledging that you are in Brussels, perhaps you could take it a bit wider, so not only Nordic governments, but governments in general. Any final thoughts from your side, from the Commission's perspective, on how governments can take a stance in helping investors with the taxonomy?
I think so. From our perspective, my perspective in Brussels, I would say that Nordic investors and governments, particularly, have been really at the forefront of developing and using the tools that the Commission is developing, or also their own tools. So I think that there is an expectation, informal, that this tool will be also widely used in Nordic countries that have a sustainability profile which is quite high for most of them. I would say that on our side, we're going to keep working on the usability of the taxonomy. It's a key aspect. It's one of the deliverables of the platform we are creating now, the platform Sustainable Finance, to replace the technical expert group. The usability of the criteria and the taxonomy is absolutely key, and it will make sure that it's working. Basically, we just received an assessment by PRI together with 40 investors that taxonomy alignment is so far quite low. It's between, I think, 3 and 20% of the funds they assessed, but still it shows that it works, in the sense that it's operational. The taxonomy can work. The issue, of course, as I said, is our data accessible data. Of course, it will come at a later stage, unfortunately, because tax regulation will cover this. But I think we are quite aware of this issue and trying to solve it in the coming years. Thank you very much.
Thank you, Emmanuel. Thanks everybody for sharing your perspective. We'll take it with us in our final report and might ask you for some final input and revisions. Before I close the webinar, Mikko, any final thoughts from Gaia's perspective on the discussion?
Thank you a lot to all the speakers. There is a Finnish proverb saying that silence is golden, so I kept silent because we had really good speakers. But there is just one last notice from me. I really got excited by what Lars-Erik, you mentioned. So with regard to these other taxonomy aspects, resilience, biodiversity, water issues, and how they are dependent on the location. So maybe this is also something where the Nordics could come in, looking at the Nordic Vision 2030, but the Nordic values in general, how the Nordic societies operate. So this kind of partnership engagement. So we will need crowdsourcing of data. We will need partnership with NGOs that know these locations. We will need satellite data, artificial intelligence, but that data needs to be secure and safe. We need to do collaboration maybe with some of the best international environmental organizations, UN organizations. UNEP is doing excellent work also getting into these data issues, and of course then collaborate with the research community. So all of these issues, I think the Nordics do have the potential. This could be an area where we could contribute to the taxonomy development, but also globally, because this other part of the climate challenge and the resilience and biodiversity issues are so urgent. So I'll stop there, but thanks also from my behalf and to the participant speakers and Ingmar also for moderating this. Thank you.
Thank you then, audience, for participating. Ash, Emmanuel, Ayla, Lars, for your contributions. We will close the webinar here, summarize our findings, and looking forward to see you at more webinars in this Nordic platform. For any questions, you can reach out to us on the email addresses on the screen there, or you can click on the link to access the landing page of the platform. Thank you, everybody, and have a good day. Bye-bye.
Thank you. Bye-bye.